There's something fascinating about how India's capital markets are transforming right now. It's like watching a puzzle come together piece by piece, with every trend, technology, and regulation adding its own shape to the bigger picture. Let's explore this together because there's a lot to unpack here. First off, India's capital markets are evolving at a breakneck pace, driven by three main forces: the rise of retail investors, the boom in digital platforms, and an ever changing regulatory framework. It's a story of opportunity and adaptation. And if we zoom out for a moment, the numbers paint a striking picture. For instance, demat accounts, essentially the gateway to investing in India, have seen a fourfold increase over the past 5 years, reaching 1.79 crore. Yet, despite this growth, market penetration remains just 12% compared to 62% in the US. The takeaway: the potential here is staggering. But who's fueling this growth? The answer lies with a new wave of retail investors. It's not just about their numbers, it's also about how they're participating. While active trading accounts and mutual fund investors have surged since 2020, the report notes that only 29% of these accounts are active in the cash segment, and just 9% venture into futures and options. This cautious approach highlights the importance of financial literacy and informed decision making in a maturing market. Speaking of participation, systematic investment plans have revolutionized how Indians invest. Monthly SIP inflows hit a record Rs 25,300 crore in November 2024, more than triple what they were in 2020. This surge reflects a cultural shift towards long term financial planning, boosted by campaigns like mutual funds, Sahi Hai. Then there's technology, the real game changer. Discount brokers like Zerodha, Grova, and Angel One are making investing more accessible, particularly for younger tech savvy investors. These disruptors now control 68% of the market, and they're not stopping there. Angel One, for instance, is expanding into wealth management and even planning its own AMC launch. Meanwhile, platforms like BSE's Star MF and digital wealth managers are catering to a growing middle income segment with data driven, transparent solutions. It's a shift from high touch to high tech, giving investors more control over their financial journeys. Regulations have also played a pivotal role in shaping the market, from stricter margin norms to new rules for futures and options trading. These changes aim to boost transparency and stability. While they've caused some short term fluctuations, the market has proven remarkably resilient. Case in point, the adjustments following the peak margin and margin segregation regulations. What initially seemed like hurdles turned out to be necessary steps for creating a more sustainable ecosystem. And let's not overlook the growing range of investment options. Beyond mutual funds, investors are exploring alternative investment funds, REITs, InVTs, and even market linked debentures. These innovative products offer a balance between risk and reward, catering to the needs of increasingly sophisticated investors. The social and demographic shifts are reshaping the market. More women, younger individuals, and even students are participating, reflecting a broader financial inclusion. Interestingly, traditional norms around financial decision making are shifting too, with more families embracing joint planning as women gain greater financial independence. Geographically, mutual fund penetration remains uneven across India, with some states and districts leading the way. Yet, thanks to technology, even smaller cities and rural areas are gaining access to digital platforms, breaking barriers to participation. Discount brokers and mobile networks have been instrumental in this transformation, enabling people to invest and trade from anywhere with an internet connection. Now, let's talk about the key players. Companies like HDFC, AMC, Nippon India AMC, and UTI AMC are leveraging their unique strengths to stay ahead. HDFC AMC, for instance, is poised to benefit from the HDFC Bank merger, which could unlock a larger investor base. Nippon India AMC is making strides in rural markets with smart campaigns like Win with SIPs. Meanwhile, UTI AMC is exploring global opportunities through its subsidiary UTI International. Disruptors like Angel One are shaking things up with their tech first approach, while intermediaries such as CAMS and KFIN Technologies are streamlining operations with innovations like CAMS Pay and platform as a service models. Even established players like BSE and MCX are evolving, with BSE gaining ground in equity derivatives and MCX launching direct market access to attract FPIs. Of course, no market is without challenges. Global economic uncertainty, inflation, and uneven financial literacy are notable hurdles. But the market is optimistic because of a young tech savvy population, supportive government policies, and rapid technological advancements as drivers of sustained growth. So here's the big question: what role will you play in this evolving story? Will you watch from the sidelines or dive in and be part of this transformation? With the Indian capital market changing as rapidly as it is, there's never been a better time to get involved with